In this video lesson I will show you what is a lot size calculator or position size calculator, which is the same in the Forex, and how to calculate the lots and the units and also the money at the risk. On the left side you can see it is a Forex calculator for the lot size, and also on the right side you have a MetaTrader trading platform where I will show you an example how to use this calculator. The link to the calculator will be below in the description, so you can check it, and also you will see an article that explains a little bit more details about the lot size calculator, what is the volume, also what is the lot size, and also how to use this calculator and how to calculate, for example, the lots and also the units and also the money at the risk. You'll see which variables you need to enter and what each of these variables means, so you can understand logically how to use this calculator. So let's start. I will show you what are the variables, the fields that you need to enter. Here you have the instrument, which you define which instrument or symbol or currency pair you will use. In this example I will leave EURUSD, but you can use also drop down menu to select any other symbol or simply enter here the instrument. You have deposit currency, which means the deposit currency on your trading account. I will use US dollar because I currently have a trading account which is a demo account with US dollar as a deposit currency. Then you define here a stop loss in the number of pips, which means in the example you will see how many pips the stop loss will be set from the open price. Then you have the account balance. This is very important to calculate the precise risk, which is defined by here by the percentage. So you need the amount of account balance to calculate what is 2% of $10,000 in this case. Then you have automatically set a EURUSD 1 pip size, which is defined by the EURUSD in Forex, which has 4 decimal points. This means on the 4 decimal point in the price it is called 1 pip. So for example, if you go here to the trading platform, you will see that the current market price is 1.0877 and the last, which is the 5th digit, is 9. Now we have changed to 78. So the 4th decimal point, in this case it is number 8, it is the number of pips. So when the price changed from 78 to 77, you can see it right now, it has changed by 1 pip. Then you have here the field where you define how much of risk you are accepting per trade. So in this case I will leave 2%, which means 2% out of $10,000, which is the account balance, is $200, which means I am expecting $200 as a risk per trade. So here you have the final field, which is the contract size, and that is units per lot, which means how much of units of base currency, in this case it is a euro, is inside one lot. You will see inside the article I have explained, and also you will have a link where you can see much more details about what is a lot size, so you can understand much more clearly what is the lot size in Forex, and also how much of base units you have in one lot, mini lot or micro lot, and so on. Here is this field, and also this field here you do not need to touch, but all these fields other, which are 5 of them, you need to set before using the lot size calculator. So in this case, for example, I have put 200 pips as a stop loss with a 2% risk on this trade. So when I click calculate, I get that I should use 0.1 lots, and that means 10,000 units, and that would give me $200 as a risk, because 2% out of $10,000 is $200. Let's go back to the trading platform and open a new order with these details. So for example, I have 99,850.63, which is close to $100,000. And I will open one lot. I will use the calculator first and calculate what should the lot be open to get 2% risk with 200 pips stop loss. So this means I would lose $2,000 on this trade, and I should use one lot. Now let's open a new trade, set here the volume, Remember that the volume here inside this window represents how many lots you would like to enter. Then I would need to put a stop loss up to 200 pips. So the stop loss would be equal to $2,000 as a loss. Okay. I will first open a trade, and the market is currently moving downside, so I will sell by the market. Okay, now I have a stop loss 0 and a take profit 0. So I will put here 200 pips as a stop loss. I will open this order and modify order and put here 2000 points, which is 200 pips, and I will modify this one. So you can see now I have a stop loss visible here, which means the profit is minus $2,007 and the pips is minus 2007. But the pips is also included the fifth decimal point, so you can leave that fifth decimal point out. So it is minus 200 pips. So you can see that the lot size calculator has given me the stop loss and also the lot size I should use for 200 pips as a loss. Now, for example, let's open a new order. But first, for example, you would like to open an order at the current market price, and the stop loss should be, for example, let's say it here. So you should open a buy order where you are expecting the price will go up, and the stop loss should be just below these 2 wicks, which means if the price goes below that, you would like to close this order. But you have currently $100,000 on your account and you would like to risk 2% on this trade. So how much units or lot should you use on this trade to have 2% risk with this stop loss? So to calculate correctly, first you need to have the number of pips for the stop loss. So let's go here, put here this crosshair at the start open price, and let's click our left mouse button and check what is the stop loss here. So the stop loss is visible here, that it is in the middle column. You can see the first number is 3, and then you have 4. Just a minute, let's go a little bit down. So you have 486, and this is approximately the correct number. If you would like to get the precise number, you should use 1.08782 minus 1.08303. Okay, so this is, for example, close to 48 pips. So let's put this number here. 48 pips is the stop loss, and click the calculate. So I would get that I should use 4,167 lots to have $2,000 money at risk. So sorry, it is 4 lots and 4.167 lots. It is not 4,000, sorry. So if I open a new order, let's open a new order, put this one here, it is 4.167, and click buy by the market. Buy by the market. Okay, and now let's put a stop loss just here where it is, and that is 1.08. Let's put this one here, 1.08303. Click modify, and I can remove these horizontal lines which were helpful at the start. Sorry, let's move it from here, and let's put our mouse over this line, and we will see that there is minus 48 pips and the profit would be minus $2,000. It is the same value that we have looked at the start with a 2% risk on $100,000 as an account balance. So this lot size calculator has given us how much the lots should we enter into the trade to properly have set the risk to 2% on our account balance with the defined stop loss in number of pips. So this is the way how you can use the lot size calculator to give you the precise amount of volume or lot size, or how much is the position size on this trade that should cover 2% risk on $100,000 as account balance. So if you have any questions regarding the lot size calculator and how to use it, please leave a comment and I will try to make a new video lesson to answer your questions. If you like this video, click the like button and subscribe. See you next time and happy trading!